Thanks for tuning in on our coverage of the WEF at Davos, and we're talking to some of the top leaders worldwide. And it's just nearly impossible to predict the ebbs and flows in the metals market. So let's try and ask some of the best minds about what they feel or what could happen ahead. Uh, Needs an introduction, Mr. TV Narendran with us. Thanks so much for joining, Mr. Narendran.
Thank you, Neeraj.
What do you feel? China opening up, the Premier, Vice Premier also mentioned that formally. How does that augur for the metal space?
I think it augurs well. I think I'm going back with more optimism than I came with. Obviously,
Okay.
one heard about the looming recession and the fragility of Europe, etc. And even on China, the news had traditionally been more negative than positive, but from multiple sessions I've attended, and also the Chinese Vice Premier's session, which I heard, uh, it's obvious that China is probably doing better than most of us realize.
Mhm.
I hope it stays that way because China is too important for the world economy,
Yes.
not only for the metals industry. And but what I'm hearing is there's a lot of pent up demand in China, which is going to come out. The savings in China over the last 3 years has been about 35%, which is higher than the 25%, which itself is quite high. And what I understand is a lot of Chinese citizens are just waiting to spend the money they've saved and travel
Mhm.
outside China, within China, in a way like we saw it happen in India when India opened up. So it all goes well. And you also heard that the Chinese premier inviting everyone to visit China, saying that there are not too many restrictions. So I think after Chinese New Year, we will clearly get an indication on where metal prices are headed. But even in the last 4 weeks, what we've seen is that metal prices in China have gone up by at least $100. So
Hmm.
let's see how this year plays out.
So
Yeah,
the problem point, if you will, seems to be Europe because US, the latest data has not been too bad as the US
yeah, yeah,
corporations are
yeah,
saying. China opening was great. India
yeah,
is probably well placed.
yeah.
You cautiously optimistic,
So in Europe, I think the demand will probably take some time to come back.
right?
Because obviously high inflation has hit it harder than other geographies. Also, the high gas prices has hit costs as far as industry is concerned. I think the good news is the gas prices are stabilizing. The winter, while it doesn't seem so just now, but they've had a warmer winter than normal. So I think they've seen through this winter, and I think there's enough gas for most of next winter. So I think, and a lot of alternates are being built in terms of LNG terminals and everything else. So I think Europe, if inflation comes down, that's good. But the biggest positive outcome can be if something good comes out of the Russia-Ukraine situation.
Most
Otherwise, I
certainly.
think Europe will continue to be a bit fragile.
Okay, and one small clarification. I was reading an S&P Platts note which mentioned that through 2023, China's demand will not be as strong per se, and the production facilities which are postponed will actually ensure a lot of production in China itself. So
Are
what
you
happens to Chinese import?
are you talking steel and or
Yes, yes,
metals? Yeah.
steel.
So it's like this, right? I mean, you know, the demand was negative growth of zero in the last year.
Right.
This year also, even if it's zero, that's fine because if you see Chinese production every year has been coming down a bit.
Okay.
Okay, so while I take the point about postponed commissioning of facilities,
Hmm.
but a lot of that is replacement facilities,
Hmm.
coming in place of facilities which have been closed or being substituted, like blast furnace facilities being substituted with electric arc furnace facilities. The other point I want to make is even during the last 6 months, when things were bad in China, you see, China didn't export much. China hardly exported 4-5 million tons a month, which the world can live with. The problem we had in 2015 was when China was exporting 10 million tons a month. I don't see that kind of volumes coming out of China. Also, China is already committed to peak carbon, I think, by 2030.
Mhm.
I think the last thing they want to do is import iron ore and export steel and leave a carbon footprint behind. So I don't think they're going to encourage that.
Okay. So how optimistic are you about your business at large in 2023 based on also the conversations that you have around world economy out here at
Yeah.
Davos?
So I think 2022 was unique for two, three reasons. Three reasons, I would say. One is the volatility. I've never in my 34 years in the steel industry seen coal prices go up and down $300 in a matter of 2 quarters, right? So that was unusual thanks to the Ukraine war. Second thing is high gas prices,
Huh.
which hurt us in Europe. And the third part is export duty in India. So these three had a big impact on our performance. The export duty is gone.
Hmm.
The coal prices are more stable, still on the higher side. Gas prices have also settled. So and demand in India has continued to be strong. You know, so I see more positives in 2023 than 2022.
Okay. Unless my math is completely off, and please correct me if it is, when I saw in Q2 or arguably the H2, right, so to say, or H1 rather, the entire reduction in the average selling price resulted in the EBITDA per ton getting impacted.
Yeah.
Now, if the reversal happens, you reckon the same shores up EBITDA per ton for most players, including you?
No. So if you look at it, if you look at the Q4 of the last financial year and Q1 of this financial year,
Mhm.
they were unusual quarters because those were quarters when we were buying coal at a higher price,
Right.
but using coal which had come at a lower price. Right. So steel
Uh-huh.
prices went up, and
Uh-huh.
typically, since India imports most of its coal from Australia, it takes a what coal you buy today hits you after 3 months.
Got it.
So in the Q4 of last year and Q1 of this financial year, we had the situation where you were using cheap coal and steel prices had already gone up in anticipation of high cost coal coming in for the quarter after that. So the reverse happened in Q2, where the steel prices had dropped, but the high price coal came in, right? So for India, Q2 was the worst quarter. Q3 onwards, the margin has started expanding, though not as much as we would have liked it to. It started expanding because coal prices continue to drop, but steel prices also dropped in Q3 compared to Q2, which we were not expecting. But now we see steel prices climbing back, still far away from what we saw last year this time. Coal prices are settling at between 250 and 300, $310. So I see more stability in margins going forward, and certainly better margins than we saw in Q2 and Q3
Got it.
in India.
Okay. So that is one positive, and arguably for 2023 at large, if it's possible to predict. Second point is if the private capex cycle doesn't quite kickstart in 2023 and gets delayed till 2024, do you reckon the government capex is good enough for demand to be buoyant?
Well, one thing is clear: the government needs to spend on infrastructure as they've been spending, because that has a huge multiplier effect for multiple industries, right? If you really look at private sector capex of 5, 10 years back, there were three sectors which dominated it. One was steel, two is power, and three is chemicals. Right? Steel, actually, it was coming back till the export duty came in.
Right.
So I think
Yeah.
that gave it a pause. But otherwise, if you see, most steel companies have announced capacity expansion. Tata Steel is saying we'll double during this decade. ArcelorMittal is also going to double during the decade. So will JSW. Right. So all this means good private sector capex coming in for steel. Power will be different because those days were the thermal power plants and coal and all that. Now it's more renewables where the capital intensity may not be as high as building up a power plant, etc. The third area is chemicals, which also I understand is doing quite well. So I think the main sectors are coming back. In addition, you have electronics manufacturing, which was not there earlier.
True.
You have automotive coming back to 2019 levels. So I think other industries will also start coming in. It's not just the government spend on infrastructure. I think the government spend on railways is very important.
Sure.
The government spend on oil and gas pipelines, etc., is very important. Power grid is very important. So I think these are important expenditures to support not only the growth in private sector capex, but the growth in industry. The other area where I see a lot of investments happening is supply chains, warehousing supply chains, because India is growing as a consumer market, and it's growing in tier 2, tier 3 cities. So supply chains are being strengthened. A lot of investments happening there as well.
You don't seem to be cautiously optimistic. You seem to be pretty optimistic.
No. I think I've been long enough in this industry to always be cautiously optimistic. Always be optimistic, clearly, because I mean these are cyclical businesses,
Sure.
and at a very fundamental level, if you look at the transition to a greener future, you need a lot of steel to transition. If you need to build more solar panels, and the support for that is steel. If you build more windmills, most of it is steel. If you want to build more grids and more facilities, and so anything that you build will need steel, or any machine that you make will need steel. So I think at a very fundamental level, I'm always optimistic, but it's a cyclical industry, so we have to manage our costs and our realizations better.
Final question. Anything expected from the budget?
Continue to spend on infrastructure. That is clearly one ask. Second is, of course, continue to work on simplifying the way to do business. I think the cost of doing business and the ease of doing business both are important. I also think as a country, we need to find ways to work better and better between the center and the states, because particularly for foreign investors, ultimately the day-to-day experience comes from what they experience on the ground, right? So policy is one part, but translation of that policy into the cost and ease of doing business at an operating level will depend a lot on good alignment between the center and the states.
Got it. Actually, this will be my final question. The chatter around India over the last 3 days in Davos that you've been here.
I think it's been quite positive. I've been speaking to, obviously, amongst the Indians, it will always be positive.
Yes.
All of us have been saying nice things about India. But I think what is more important is when I speak to people from outside India, and I've been speaking to some of them yesterday and even this morning, uh, unprompted, they told me that the buzz is positive about India. So it's not that I've been fishing for compliments on India. I think they themselves said that it's positive. I'm hearing good things. They feel India is well positioned. While there is continued interest in China, it's not that people will get out of China to come into India, but I think a lot of incremental capacity will come into India. Many of them are talking of producing in China for China, producing in India for India, and maybe for other parts of the world. So it need not be uh, China, India at the cost of China, or China at the cost of India. I think there's a lot of incremental capacity which can find a good home in India.
Great. Lovely knowing that. Thanks so much for speaking to us, sir, and have a great remainder of Davos.
Thank you, Neeraj.
Lovely
Thanks.
talking to
Yeah,
you today.
thanks.
Viewers, thanks for tuning in.